everyone, welcome to NDTV Profit. You're watching the Small and Mid-Cap Show. I'm Hiral Dadia, and one multi-bagger of 2023 that we have been talking about since quite some time is a Suzlon. A growth of almost 3.6 times in terms of where the share price goes is what we've seen in 2023, and the kind of turnaround that has come in has been spectacular as well. The recent order wins has been one of the talking points that we have been watching out for, and joining us on the show to discuss more is Himanshu Mody, CFO at Suzlon. Himanshu, firstly, wishing you and the team a happy new year, and congratulations for the kind of order wins that we've seen in the recent past.
Thank you, Hiral. Wishing you and your viewers a happy new year as well.
Himanshu, my first question coming to you is clearly, earlier also when we've spoken, when we were looking at the first half of FY24, the kind of order book that you had was a confirmed number at 1.6 gigawatts. And I think out of that, around 267 gigawatt of deliveries, but already done by then. Currently, how much has the order book grown by, number one? And two, what's the kind of execution you're looking at?
So as we speak, our order book is a little shy of about 2 gigawatts. Obviously, in terms of our own deliveries for the 9-month period, we shall be coming out with the quarterly results in the next few weeks, which is when we'll be reporting those numbers to the street. But obviously, the overall traction in the industry and therefore for us as Suzlon continues to be very positive. And we see a sort of good tailwinds in terms of order book availability and ability to be for the orders to be executed.
Right, Himanshu, from an execution perspective as well, the key from here on is that in the first half, yes, volumes were lower. However, we did see a good improvement from an operational perspective for the company. Now, usually what we've seen as a trend is that around 30 to 35% of the deliveries for Suzlon happen in the first half and the remainder happens in the second half of the year. Taking that trajectory into consideration, what is the FY24 deliverable in terms of executions expected to look like then?
So again, difficult for me to give you a specific number on where we land up at FY24, but I think ballpark you're correct. I mean, historically we've seen about 35% odd in H1 and the balance 65 in the second half of a financial year. Moreover, if you see FY24, which is the current financial year, has been more of balance sheet strengthening for us. So on the back of our second round of rights and QIP, we were able to make the balance sheet completely debt free by September. So I think a large part of the first half of the financial year went for us in sorting out our balance sheet issues once and for all, strengthening our working capital ability to be able to execute the order book. So all of that is now behind us, and focus is purely on operations. So whilst yes, we are continuing to focus on FY24 deliveries, but I think going forward, a large part of the existing order book that we have would be towards FY25 focusing.
Right. So, the order book that you're mentioning where you're a little shy of 2 gigawatts already, what's the kind of revenue recognition that you would see out of these order wins? And in terms of revenue inflow, will it be in FY25 all, or do you think there could be a spillover out of the current order book into FY26 as well?
So there would be some spillover into FY26 as well. Having said that, we are also in active discussions for securing some more orders for FY25. But of the existing order book, there would be some spillover in FY26 as well.
So what would be the peak revenue recognition that you're seeing for the cumulative order book right now?
So again, I don't want to give guidance on volume and revenue numbers for FY25 as yet, but on an average...
No, I don't want, Himanshu, I don't want anything for FY25 alone. I'm saying if the current order book is a little shy of 2 gigawatts, that cumulative order book, how much revenue does it translate into?
So typically our, on an average, it's about 6 crores per megawatt is what it translates into. So it depends on the scope of the contract, whether it is just supply contract or it is a full scope contract. But on an average, our realization per megawatt in revenue terms is about 6 crores.
Got it. Now, with this, you already mentioned about the turnaround and the strengthening of the balance sheet that was in focus, and that's what you've seen from an optimization perspective. The company has turned cash surplus already. One of the factors that we were always watching out for was the interest cost burden on the balance sheet, which it seems now onwards will not be there. So, what does that number look like? Because, and how much do you see it reflecting on the books now?
So I think, other than the H1 numbers, what we had the interest cost going forward in H2 and even in the FY25, our interest costs will be very minimal. It will only be reflective of the LC and bank guarantee commissions that we have to pay to banks towards our working capital, which are all non-fund based limits. And we'll, of course, have to net off any interest income that we have from the cash on the balance sheet. So any interest cost, if any, will be very, very minimal going forward.
Okay. And overall, there were plans to go ahead and sell non-core businesses or land as well. Where are you on that stage? Because now that we are seeing the balance sheet, which has a cash surplus, what is going to be the strategy? A shift coming in there? Because I'm sure a lot of assets would be then put on hold.
So clearly, I think I would classify into two big assets we've always been talking about. One is our large piece of real estate that we have in Pune, and the other is SE Forge, which is one of our 100% subsidiaries. So from a real estate perspective, yes, we will be continue to actively pursue any divestments plans of that, so that we further strengthen the balance sheet from a cash perspective. And so far as our subsidiary SE Forge is concerned, we continue to keep that under the belt because given the tailwinds that we are facing in the industry, we believe that the subsidiary also would have a significant growth potential from here on. So therefore, we'll be very opportunistic, I would say, to look at any divestment opportunities for SE Forge.
Right. But is there any concrete plan where, we want to do something in the current or the next financial year, or is that something which will be absolutely fluid?
I wouldn't say it's fluid. I mean, our very, very clear focus is to, execute the order book that we have in a timely and profitable manner. So, clearly we have our blinkers on, if you were, to ensure that whatever order intake that we've taken from a wide variety of customers, we're able to deliver that in a timely and profitable manner for the shareholders.
Right. Himanshu, another thing is from the wind turbine generator sales as well, right? I think 2 models that you were already developing. Now from there, what's the update? How much is actually, coming in with regards to deliveries from the 2 megawatt and the 3 megawatt perspective?
So our 2 megawatt model, which is the S120, has been in operation for quite some time. We've also rolled out the S144, which is the 3 megawatt machine. A lot of our new order wins have been on the S144, the 3 megawatt machine. So if we look at our existing order book, I would say the mix would be roughly about 2/3, 1/3 in favor of the S144 turbine.
Okay. And overall, from the business segment perspective that, we divide Suzlon with 2, OEM, if I'm not mistaken, is around 25 to 30% of your top line. Will you see the mix change going ahead, taking into consideration the kind of deliveries that will be happening on the turbine side? And if so, what will that mix look like?
Yeah, so just to guide, I think you meant the services. The O&M business is about 25 to 30% of our top line. Certainly, as the turbine sales keep growing, in terms of percentage of the overall top line, the services business will reduce in terms of percentage of the overall pie. Directionally, that's correct.
Okay. And from a margin perspective, does this become more accretive, which aids margins going ahead? And if so, what's that mix expected to look like?
So margins, look, on the services side, because it's the nature of the business, the margins will continue to be more attractive on the services business. However, on the manufacturing business, for us, which historically has been loss-making or either just about break-even, we will see, healthy, profitable margins coming into the manufacturing business as well. Albeit in percentage terms, the margins in manufacturing will always be lower than that of the services business. So, it's the blended that one will have to look at depending on the top line mix.
Right. Himanshu, on the Model B offshore wind turbines, what my understanding was that you would not be participating directly and you would be working with other companies who are bidding for the project. How does that bid pipeline look like for you?
So offshore wind, in our view, there are a lot of policy issues in this country that need to be sorted out. Other than the commercial viability issues, we are not a landlocked country like anywhere in Europe. There's plenty of land bank available in the country for us to be able to install turbines on ground. Having said that, it's not that offshore should be ignored, but the current viability and policy for offshore wind needs to develop to a certain stage. From a technical perspective and ability to execute, we as Suzlon will be ready, once the market is matured enough to take the offshore wind turbine potential.
Right. And how are you looking at the solar side of it? Because, you're not really taking up solar specific projects. In solar, you're not manufacturing anything yourself as well. But I remember in one of the conference calls, you had mentioned that if a need arises, you will get into solar where there is a hybrid project ongoing. Any developments on that front?
So again, just to correct, there are no current intentions of the management to get into solar. What we always maintain is that, whether it is wind or solar, it is not competitive to each other, it is complementary to each other. So if we look at a slew of the most recent projects, whether in the private IPP space or in the bidding space, it's largely been hybrid between solar and wind. So we continue to focus our energies on the wind segment, which is complementary efforts to solar. So no specific plans of us entering into solar as yet.
Himanshu, with regards to the government initiatives, when you talk about the government's target of around 500 gigawatts of non-fossil based capacity, which also includes a healthy mix of wind and solar capacities by 2030, how does this augur for Suzlon, and where are you seeing the tailwinds?
So if we purely look at wind within that 500 gigawatts, about 100 gigawatts by 2030 is expected to come from the wind segment. And of that 100 gigawatts as a country, we are at give or take about 45 gigawatts as we exited 2023. So that leaves us roughly about 55 gigawatts as an industry to be executed over the next 7 years. And Suzlon being one of the largest market leaders in the segment, I think we are well positioned to capture a lion's share of that market opportunity.
Okay. And with regards to India's first offshore wind tender, that was expected to be floated soon as well. Any update on that one?
So as I said, we're keeping our eyes and ears open. We are not, committing any extensive, financial or management resources as yet on the offshore segment. But, whether we participate in the bids alone or whether we sort of partner with a strategic financial partner, time will tell. A little early for me to comment on that, but we're keeping our eyes and ears open.
Okay. Another aspect I want to discuss with you is the discontinuation of the irreversible bidding for wind. How is that expected to help Suzlon as well?
So clearly, when that happened, the prices or the tariffs for the wind segment, firmed up. As you know, in the reverse bidding, a lot of the participants went down to abysmally low levels in terms of tariffs. As a result of which, a lot of the projects which were bidded for didn't even see light of the day and remained unexecuted. So now with that being discontinued, I think we're already seeing the tariffs getting firmed up a little, and that is a step in the right direction to propel the wind industry towards that 100 gigawatt.
Okay, and clearly, the order win pipeline that we've seen for a Suzlon in the last 9 months, my calculation tells me almost is 1000 megawatts. If you have to see India's wind capacity commissioning in FY24, that is going to be around 4 gigawatts as well. So that's also a substantial increase from that 1.1 to 2.3 gigawatts that we had seen in the past. Once you put all of this together, what's the kind of market share do you think Suzlon will be sitting on?
So market share is, a metric we don't want to monitor as yet. But you're right. I mean, our estimation is that the country will commission a little shy of 4 gigawatts in FY24. And FY25, our estimation is that that number could be anywhere around 6 gigawatts, give or take. Our order book is, of course, visible now to the markets. So we will continue to have a healthy share of the market. But again, I don't want to put a percentage number on what we target.
So this takes me to my next question from a capacity perspective. Taking this kind of increase from a country perspective, I think Suzlon, a capacity of around 425 gigawatts is what you're sitting on. What does it look like going ahead? Because 2030, I think you have a target of 777 gigawatts. What are the capex plans? Where are we on that front?
So our current ability to execute, is anywhere between 3 to 4 gigawatts in a year is what Suzlon can execute based on our current plants and the capacities that we have installed. And as we transit towards introduce more and more newer models, that capacity would keep increasing. We of course historically have incurred about close to 100 crores a year in capex, which is more like sustenance capex. But going forward for FY24 and the next few years, we would be increasing that capex number to ensure that we keep building on capacity beyond the 3 to 4 gigawatts that we currently have installed.
Okay, so with the recent fundraise that we've seen, from the QIP, clearly used in terms of debt repayments, etc. Do you think you need to do anything more in order to execute these kind of solid set of orders?
No, I think, from a financial perspective, we've ticked all the boxes. I think, from a branding perspective, Suzlon has a, huge brand recall and brand promise with our customers. Ability to execute always existed within the company. So there's, never been a doubt on that front. So from a timing perspective, I think, all ends have met, and, it's just about waiting it out over the next few quarters to see how profitably and effectively are we able to execute. Having said that, there are, of course, challenges on ground in terms of execution. It's not a cakewalk, and it's not, an easy business to install turbines. But I think Suzlon's learning and understanding, its people, its experience, all come in handy towards meeting those challenges.
Right. Himanshu, another aspect, again, I'm going to go back to the 3.3 megawatt turbine, which is already underway. What is the kind of difference does it actually make to the overall operational matrix, just to understand it from an investor perspective?
So, there are, firstly, the number of footprints that a customer needs is lesser, because when you're installing a 2 megawatt turbine vis-a-vis a 3 megawatt turbine, it's certainly a higher powerful machine, and therefore the number of footprints or land required is lesser. In terms of cost per kilowatt hour or AEP or some of the matrices that a lot of these customers measure, I would say it is similar between a 2 megawatt and a 3 megawatt machine. It is just that the balance of plant or the EPC execution costs, because it's a higher capacity machine, is lower.
Right. And coming back to the order inflow, in fact, another point that I recollect is Inox Wind, who had clearly indicated to us that the order inflow is going to be absolutely strong in the fourth quarter. Are you also seeing a similar trend where Q4 could be stronger than what you've already seen in the first 9 months?
So again, we have a very clear policy of announcing orders. I can't comment about any of our other peers or competitors, But from our perspective, we only announce orders once we have signed a definitive contract and we've received an advance consideration from the customer.
Okay, so I wouldn't want to say that, give me a number in terms of how much can you expect, but from a general order trend, is the flow expected to be stronger? Not, it might not be to a Suzlon, but from an industry's perspective.
No, I would say from an industry perspective, there is a lot of inquiries coming in from the customers. Clearly that buoyancy and eagerness to execute wind projects continues, whether it is across the IPP segment, C&I segment, retail segment. So I don't think it's about Q3 or Q4. I think that phenomena for the next few years will continue if the 100 gigawatt dream for 2030 has to be met.
Okay. And overall, when you talk about wind energy, 2024 to 2028, which is the 5-year target, do we reach 10 gigawatts in 2025, or do you think will it take longer?
No, I think, personally, I think 10 gigawatts in 2025 is being very ambitious. As I said earlier on, whilst we do a little around 4 gigawatts in 2024, estimations for 2025 would be around 6 gigawatts, give or take. If you talk to someone who's conservative, may say about 5 gigawatts for 2025. If you talk to someone who's aggressive, may say 7 to 8 gigawatts. But I think touching the 10 gigawatt annual installation or commissioning for 2025 would be a tall order.
Right. And Himanshu, Suzlon earlier has guided for doubling of dispatches in the second half of FY24 as compared to the first half. Don't give me a number, but overall, are we still with it, or do you think we will be able to overshoot this number as well, taking the current numbers that we are discussing?
No, as I said, from a trend perspective, about 35% in H1 and the balance 65% in H2 has been the historical trends. And I think, the similar trend would continue for this year.
Right. And the last question coming from my side is, any idea or a consideration for a reverse stock split that could be considered?
No, so it's an idea that, we've toyed around with, but, clearly no decision has been reached upon as yet. And as I said, it is, for us, clearly for the next few quarters, blinkers on to execute the order book, show performance. Balance sheet optimization, how, what, where we can do. We keep talking to our tax advisors and teams to see how we can further strengthen the balance sheet. And this has been an idea that we've toyed around with, but clearly no decision on it as yet.
Right. Very lastly, one key milestone, taking into consideration the turnaround that we've already seen, may it be in 3 years, may it be in 5 years, what is it that the company wants to achieve?
Well, I think, clearly a 3 to 5 year dream would be, not only to strengthen our position in India, have a large part of, supplies, be instrumental in that journey towards the 100 gigawatt dream, participate in the offshore turbine journey as we start. But going forward, we also have good strengths in our international markets historically. So whilst in the past we've faltered in some of those markets, we will take very calibrated steps and be opportunistic about selectively entering some of those markets, but certainly not in the next 12 to 18 months. There the focus is India, and more in the medium term, I would say, if there are no surprises coming from this market over the next 2 to 3 year period, you can see us, restarting our international supplies as well.
Right, that's going to be an interesting move to watch out for as well. Thank you, Himanshu, so much for joining us on the show and sharing the views, because this gives us a lot of clarity of what is in store with regards to 2024 and the next 18 to 24 months from here on as well. So that's with regards to Suzlon, a clear multi-bagger of 2023. Lots to offer to the investors as well from here on, and a stock that investors will keep their eye on. With that, it's a wrap on this edition of the Small and Mid Cap Show. Thanks for watching, and lots more lined up on the other side. Please stay tuned to NDTV Profit.